Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for July the 5th, 2016. My name is Doug McKay. I am the founder and head moderator for Quantum Leap Futures. Each morning we get together in this live go-to session, pre-market, to take a look at the market macro to micro, take a look at the structure of the market, drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room, so if you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. This is not a commercial venture. There's no website. There's no blog. We do this live every day, and then we do live trading and analysis during the course of the trading day. Before we get started, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, take a quick look at news. Of course, we're coming out of a holiday weekend. Hope everybody had a happy Canada Day and happy Independence Day for you Americans, and everybody stayed safe and don't have too big of a hangover today. Not a lot of news today. We've got factory orders at 10 o'clock Eastern. We've got IBD and TIP economic optimism. And then we've got FOMC Dudley speak. We've got some headline news that you want to keep an eye on concerning the Italian banks. That was most of the talk over the weekend, and how the Italian government is talking about flooding their banks with printed money because the euro isn't giving them enough of a billion-dollar bailout, or I forget how many billions it is. Anyway, watch for the news. Just taking a look at the macro picture. I like to start my day each day with a candlestick chart, a 9 EMA, a 20 SMA, start on monthly and start working my way down so I can see where we are within the different time frames in terms of trend. You can see that we're in consolidation mode here. We're back above the 9 and the 20. We tested below it and violated the trend at the end of 15 and the beginning of 16, but since then, for the last 4 months, we've held above the 9 and the 20 in terms of the close. We did have a bearish month, but it wasn't really that bad. We opened at 94 and we closed at 86.50, so we're opening lower than the prior month. Our month open is 2086.50. That'll determine whether or not we have a bearish or a bullish month. So keep an eye on that during the course of July in terms of do we continue to get a continuation of this trend up after consolidation. Going to the weekly, our weekly open is 2099.75. We're currently below that, so we have a bearish week going, but we are above the 9 and the 20. You can see that we came down and took out that naked cross at the 83 level and then bounced right from there, and now we're above the 9 and the 20. We've lost some separation, but we do have slope. A test of the 9 will take us down into the 2070. I'm watching the 2073 as my key line in the sand below. I'll show you why, but the trend itself is intact on the weekly. On the daily, you can see that we have had last week was a positive week after going down on the Brexit news, and we took it all back, and here we are back above the 9 and the 20 and going sideways in consolidation. Going to the intraday, you can see that we had this strong uptrend, and then so far this week they've taken it back or violated it, and we're below the 9 and the 20. We just rejected the 9 or the 20 SMA from below at 87, 75, 88 level. So we could be seeing a consolidation or a rollover here on the 4-hour. There is a naked cross down here on the 4-hour. Note note it in your journal at 2017.50. It's a significant number. I'll show you why when we get to the composite chart, but it is on the 4-hour, so just keep in mind the time frame that it shows up on. Going to the 1-hour, you can see that we have rolled over and we do have slope and separation to the downside. So we've got a downward trend happening. There is a naked cross down here on the 1-hour again at 1996.50. Again, but it is on the 1-hour, and it is quite a ways away right now. Just future reference, you just write it in your journal so you have it for your notes. Going to the 30-minute, you can see we've had strong downward pressure. We keep creating these bearish flags and then continuation. Right now we're trying to get back above the 9 but failed so far. If we get above the 9, I would target this 20.87 again. But right now, the downward trend is intact on the 30-minute. And on the 15-minute, we've had same pattern on the 15-minute, but they've taken it back, and now they're trying to hold it. So we could get a trend change here on the 15-minute if we can hold above the 20.84. Going to the 5-minute. Same thing. We've got a naked cross right here at 20.83 1/4. So just watch to see we've started this upward trend. We've got some separation. We don't have the slope yet, but this could be a trend change if we could hold above this 9 and the 20 on the 5. But right this naked cross down, we're likely to come back and take this out in the next 10, 15 minutes. All right, so let's go to the structure of the market. I have not scrubbed my holiday data. I don't usually do that. I pay attention to Friday, but I also pay attention to Monday. A lot of people like to scrub their holiday and take the holiday right out. To me, there was trading, so there was some participants, but I'll be weighting everything against Friday and just noting the Monday. So I've got Friday levels and Monday levels. Currently, right now, we're going to gap down on Friday and on Monday, more importantly on the Friday, and we're going to open up down here in this distribution zone that centers around the 81 and the 78, with 73 the lower side of that balance and the key line in the sand. You can see that we are above the longer time frame. This should be here. The longer time frame value area high is at 79.50. That's going to be a very important level for us to hold between the 79.50 and the 78. Because if we can't hold that, look for a trip all the way down to 73 and then testing that lower side of the balance that we're in. And if we can't hold that, then we're back into this distribution zone and back inside of value and getting back into this undetermined fair value that centers around both the microcomposite VPOC and the composite VPOC that goes to the beginning of 2013, which is at 2042, and we're likely to come back down here and chop. If we can hold above the 78, 79 area, then I'd look for them to come up and test the range low from Friday and test up into the 93. 93 1/4 is going to be our key line in the sand above. If we can get above that, then I'm looking to go up and test the 96.50 and back to test that 2100. We tested it in the holiday session and rejected it one more time, and they came right back down, and we're down about, I think about 20 points off of the high this week, and about 21 points away from the Brexit scene of the crime, which is up at 2106 1/4. So key levels to pay attention to: 81, 78, between 79, 75, and 78. 78 obviously is the more important number. 73, and then below 73, it's all going to be about moving back down into the 61, 62 area, which is the first area of price acceptance in this distribution zone that centers around that 42. And then we're into that area, and the key numbers there, you should know them by heart by now: 61, 52.50, 46.50, 42, and 31.50, all key levels of undetermined fair value, and likely to chop between those levels if we get back down there. Above us, you've got the 80, 85, 88, and 93, and then above 93, 96.50, 2100, and the 2104.50, and the 2106 and a quarter. Return to the Brexit scene of the crime. And then above that, of course, 2110.75 and 2119 is 1950, or we expanded it up. I think we expanded it up. Sorry, let me just go back to the daily. It's 21, no, still 2119.50. Okay, so let's take a look at what happened overnight. You can see that we've got the overnight high up at 2099.75. Our overnight low is 81. Of course, that could expand lower. We still have lots of time left, over 32 minutes. Our current VPOC could shift. It's either going to be 82 and a quarter or 85, or is it 84.75? 84.75. I'm going to put in 84.75. So that's where it is right now. And then we have this LVN at 90.50. So that's going to be a trade area. You can see we've got the naked close at 88.50. That comes from Thursday, I believe. The low from Friday at 89, and then this LVN and midpoint from the overnight session at 90 and a quarter. So I'm actually going to use 90 and a quarter rather than here, because this is where we're likely to reject. And I'm going to have to use this as a slush zone. I don't want to be short unless I'm below 89, and I don't want to be long unless I'm above 90 and a quarter if I'm going to enter in this area. If I'm already long, I want to scale before the 89, probably even scale at the 87.50, and then not add into the trade until I'm above 90 and a quarter. So just, and if I'm short, I don't want to add into the trade below 90 and a quarter. I want to wait until I'm below the 89 and breaking out of Friday's range. Other than that, there's really not a lot of information. You've got the 93.50, of course. That's going to be our key line in the sand above. And we don't need any more of this. And okay, I'm going to put this to a 15-minute because I want to be paying attention to the levels on Friday more so than I want to pay attention to the levels on Monday. All right, so, and then I can expand this out. So right now we're trading in the 85. We've got this middle distribution from Thursday. We've got Thursday's naked close just above us at 88.50. Inside of this distribution, the HVN is 85, which is also where our overnight VPOC is. So this is definitely a target. And then the lower side of this distribution, we had the VPOC shift at 83. So I'm going to put a trade level at 83. And then we get into this LVN area down here between the 80, 50 and the 78. And 78 is going to be a target for me, but I'm also going to, if we get below the 80, I'm going to look to add into this because we'll be taking out the overnight low, and overnight low is 81, and getting into this LVN zone from Thursday, and we're likely to dip down pretty quick into the 78 because that's going to act as a magnet, and that puts us below the value area high and back in the value area that centers around that 42. And then the below us, the key line in the sand is Thursday's value area low and the CLVN at the 73. Below that, I'm targeting 67.50, 65.50, and then the 61. Right now, our overnight high is at 2099.75. Our 20-day ATR is running 22.75. So 2099.75 minus 22.75. Our daily ATR downside target is at 77. So below that 78, we get the possibility of a trend day down, but I wouldn't really look for a trend until we get below 73. Then you get 67.50, 65.50, 61, and then below the 61, okay, we're right back into the thick of things, and I'd be looking for a move down into the main target, which will be the, 61 is really going to be the main target. Take this out, and this is going to be the main target today. So 61 is the key target below the key line in the sand, and then 54, 52.50. Remember, 52.50 is the composite VPOC if we bring in the Globex, whereas the RTH is down here at 42. And below 42, then we've got the 34.75, 31, 28 and a quarter. Sorry about this, somebody trying to call me.
Please leave a message after the tone.
All right, and that takes care of the lower levels right now. And then above us, we've got the overnight VPOC, which is the balance in this area right here, Thursday's middle distribution, and then 87.50, 88.50, 89 range low, and then that 90 and a quarter. This is really a hard area to trade, so you really want to lean against the 83 and a quarter, if not the 84.75 for the long into this area right here between 87.50 and 89.90 area. And then above 90 area, we've got the 93.50, and then into, now this doesn't show as a naked VPOC, but it really is at 95.75. But because I'm not scrubbing my holiday, it looks like it got taken out on the holiday. But I'm going to just note it here that this is a naked VPOC target, because if we're above 90, I want to be long into that naked VPOC. And then we've got the value area high from Friday and the value area low from the holiday session basically overlapping at the 97.75. So I'm going to use 97.75 as a trade area. And then above that, we've got the naked VPOC from the holiday session, and of course the 2100, which is just above the overnight high. I'm actually going to use 2150, and then above that 0250, 0450, and the key line in the or the return to the scene of the crime, the Brexit at 2106 and a quarter, and 2109. And I don't want to be short if we're back into the 2100s, because if we get into the 2100s, we're likely to continue upward. We tested it a couple times. If we get back in there, I'm expecting a move above that 19. We still have that 2134 that's above us. Our daily upside ATR target off of the low overnight of 2081. Our upside ATR target is 2103.75, so just in front of that 04. In fact, I'm going to take the 04 off and just target the 2103.75 as the target, and above that the 2106. So that's our levels. What is my hypothesis? Well, we're going to open auction out of range, below range and below value. So my first hypothesis is a open auction out of range, a move up, take out the 8750, the 88 and the 89, and somewhere between here and the 90 and a quarter we find initiative sellers, and they rotate us back down and take out the overnight low and come down into the 78, where I'm expecting to chop and then probably slowly work our way back up. So Hypo 1 is an open auction, out of range, a move up, failure somewhere between 87.50 and 90 and a quarter, maybe even 93. Initiative sellers step in, rotate us back down, take out the overnight low, come down into the 78 area and chop around in here and slowly work our way up, and probably spend the rest of the afternoon chopping in this middle distribution above the LVN from Thursday. Hypo 2 is an open auction out of range, a choppy open, maybe even take out the 87, come down into the 78 area, chop in here, and then get a continuation wave down towards that 67, 61 area, and chop in this area between here and 73. So Hypo 2 is an open auction out of range, a push up, move down, chop in the 78 area, and then get continuation lower down into the 67 to 61. Hypo 3 is an open auction, out of range, a move down, find buyers at 78, come up, chop in the 2090 area, 2088 area, and then get continuation wave up into the 95 and chop around between 2100 and 93.50 into the close. I'm not expecting a really expansive day today based on my hypos, you know, my Hypo 4, my alternative hypo is, there's going to be two. There's going to be a Hypo 4 and a Hypo 5. Hypo 2 is an open drive down, push down to the 78, then continuation down into the 65, 61, and then get a trend day going with a break below the 61 and come down here and chop in this area between 42 and 52. So Hypo 4 is open drive, move down, chop, continuation, and get a trend day down towards the 42. My fifth hypothesis is the opposite, is a trend day in the upper direction, where we immediately come up, chop around in the 89, push through, take out the overnight or the naked VPOC, chop around here, and then break above 2100 and push through to the 2109 area and close up in the 2100 somewhere. So I know there's more hypos than normal, but there's multiple possibilities because of what has happened within the holiday session and what has happened on Friday, so I have to have a couple alternatives so that I'm not caught unawares. So just be careful. It's going to be, it's going to be a balancing to find value first, and then one side could take control and take over for the rest of the day and get a bigger move. Just take a look at gold. Gold chart. Gold gold continues to move up. It's moved up again. Value is at 1339 right now, thereabouts. We're trying to get above this CLVN at 5670. If we get above 5670, target the 6350, and anything above 6350, I'd be looking at the 78, 79 area and a move up into this distribution. I don't think it's going to happen right now. I think we're going to have a pullback in gold, so I'm looking for gold to come back down towards 39, if not to the 23 level today, and get back into this little distribution to mature it a little bit better before we continue higher. Gold's just been on fire, and it's gotta take a rest and backfill. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.